Sama, thank you for joining us today. We're in the great city of London for the World Nuclear Symposium 2025. There's been many positive changes this year, one of which is the venue. We're at the Royal Lancaster. I love this place. It's right on Hyde Park. Why the change in venue?
Well, this is our 50th World Nuclear Symposium. So we wanted to make it bigger and better, if that was even possible. So this is why we needed to have a bigger venue, and the other one just grew too small for us. So as you know, this year we have 1,100 plus participants from 57 countries. So, it's huge. So that's the reason. The reason is we needed more space, we needed to grow, we needed to have space for all the people that are interested about nuclear.
And I remember last year when you and I were speaking, we mentioned that there was a lot of investors here from a lot of the world's largest investment funds. Do we have the same sort of participation this year?
Well, this year is even more than that, right? So as you know, this year, in addition to the main executive program that you are familiar with, this year we have two summits. One strategic summit on finance and the other one on energy users. Why? Exactly because of what you just said. We've been trying to bring all these key stakeholders along with us into this journey, but at this point, the interest is so big that we really need to have a special symposium to deal with the specific aspects of finance community. So yeah, they are all here. Hopefully you had a chance to chat with some of them today.
And one of the mandates of the World Nuclear Association is always producing content to educate people throughout the world on the benefits of nuclear energy. And to this point, one of the reports that you recently released was the nuclear fuel report. What's the purpose behind this? And maybe you can also speak to why investors might have an interest in this report.
Right. Well, you said it. We are an intelligence organization. Part of our job is to provide information and provide actionable data that, investors or the nuclear community or governments can use in order to make wise decisions. So yes, the World Nuclear Fuel Report will be released on Friday. So you are going to have to wait. I mean, maybe you have the embargoed copy because you are pressed. But so we will release this on Friday. And it is a very important report. Why? Because, obviously, we cannot triple global nuclear capacity by 2050 if we don't have triple uranium fuel to actually power this generation. So it is important to make sure that we have that the supply and the demand of fuel are going to match. And if not, what are the recommendations? What is the industry, governments, financiers need to work together in order to make sure that we have uranium mining, we have conversion, enrichment, fuel fabrication. Essential, a very essential report.
And the nuclear fuel report is only produced every 2 years.
Correct.
Given all the changes within the industry and within the uranium mining sector, why not do it on a more regular basis every year or twice a year?
Well, so you're right. So actually, this year we have a new set of reports or sections in the report, because as you said, the world is changing, and then the nuclear fuel world is also changing. So for the first time ever, we have introduced this year a chapter in which we, in addition to the global demand and supply, we look at regional imbalances. Because with the geopolitics, geoeconomic complexities that we are seeing right now, it is important not just look at the overall supply and demand, but to analyze whether we have gaps or opportunities for growth in different regions. So that is a unique thing. And so even though we don't produce the entire fuel report anew every 2 years, every year we actually, in the in-between year, we produce an update. If there is any highlights or things that the investors and the financiers and the decision makers need to know, we do produce an update in the middle.
And the second report we have to highlight is the World Nuclear Performance Report.
Yes.
Tell us about this report.
Well, the World Nuclear Performance Report is produced every year, and it was released on Monday. So this report summarizes, number one, the status of the current fleet of nuclear reactors, but also it gives an update of what is under construction and what is the prospects, right? So the good news, which is fabulous news to me, is that 2024, the nuclear industry had the largest generation of electricity ever. So basically, we broke all the records. I mean, the previous record was 2006. So now we have broke a new record. So we are excited. This is a great accomplishment. At the same time, you probably heard me. I am challenging the industry to break this record again next year and the following year and every year afterwards.
That's a great challenge. So you and your team are always speaking at various events. Are there any other events coming up before the end of the year that we should be aware of?
Yes. There are many things happening. I mean, of course, we are going to be in Africa at the Africa Energy Week because, as you know, there is lots of interest in nuclear energy in Africa. On the one hand, many African countries are rich in resources, including uranium. So that is a very interesting part of the world to discuss the front end of the fuel cycle. But at the same time, I mean, there is 600 million people in Africa with zero access to any energy. So they are looking at nuclear energy as one of the pieces to actually end energy poverty in Africa as soon as possible. So that's one. That will be in early October. Then we will be in Singapore International Energy Week, another opening market. You know that all the ASEAN countries are looking very, very, very seriously at nuclear. Vietnam, Indonesia, Thailand, Malaysia, Philippines, Singapore, all those countries have more or less advanced, in some cases very advanced, like Philippines. In some of cases not so advanced, but there is a lot of momentum there, so we will be there. And then afterwards, we will be at COP30 in Belém, in Brazil, again, bringing the importance, the essential role of nuclear energy to address the huge, enormous global challenge that we have of climate change. So that's what we will be.
So you have a lot going on. Well, listen,
Gosh.
I want to thank you very much for spending time with us today, and congratulations to you and your team on putting on another successful event.
Thank you, Jimmy. It's always a pleasure to join you here. Thank you.
And we'll see you in 2026.
We will do that. Thank you.
John, thank you for joining us today. You and your team are in London meeting with investors. I'm curious how these meetings are going, and maybe you can give us some color on the type of funds you're meeting with also.
Yeah, we've been book solid, which I think is a really good sign that investor interest remains very high. Right across the gamut of specialist funds that have been involved in uranium for several years to a number of new generalist funds that we're talking to. That I say this all the time. They're still very early in their research work. They view this as kind of a mega trend, a long-term secular play, and they continue to do work on uranium and the whole nuclear fuel supply chain. So we've had a lot of really interesting meetings over the last couple of days.
And in terms of jurisdiction, are the Americans, Europeans, Asians?
It's a real global trend because it is a global trend. With the exception of a few outlier countries, I think the world is really pivoted back to nuclear energy as a solution to meet a number of really important needs. Obviously, energy security and national security and climate change driven objectives are all, I think, taking front center stage in terms of why they're pivoting back to this technology. And obviously, a more emerging theme that's coming out is around grid stability. We saw grids in Spain in the last couple of months fail. People are looking for baseload power. AI data centers is a huge part of this story. These hyperscalers are consuming huge amounts of electricity. So the utilities here, I think they're feeling very good about demand for their electricity, and also electricity prices remain very high. So that's a good environment for these companies to make investments long term.
And when you're meeting with these funds, especially the generalists, what sort of questions are they asking you?
Yeah, they're really trying to understand all the parts of the supply chain, everything from uranium mining to uranium fuel processing to all the companies that are involved in the actual manufacturing and building of power stations. Obviously, there's a lot of new emerging technologies that people are trying to assess to see which ones are going to be the winners in that race to develop small modular reactors, micro reactors, etc.
I was speaking with somebody earlier, and they were sitting on numerous meetings, and one of the things they pointed out to me was that everyone's talking about nuclear energy. Very few people are talking about uranium.
Yeah, I actually agree with that assessment. There's been a shift, I would say, from 2 years ago when we were here. when it was all about the fuel, and now it's gone down market, which is actually good, because if you want to have more uranium demand and stronger prices, you need to build more capacity downstream. So the focus, I agree with, is actually shifted to all of the interest about building new capacity at the power station level, which will ultimately lead to more uranium demand.
So last year, I'm sure you would agree with me when I said it was characterized by a lot of frustration because we saw a big pullback in the spot price. 2025, a little bit different. It kind of feels like it's stabilizing and maybe consolidating. Maybe you can give us some color on what's happening, or your assessment on what's happening within the spot market.
Yeah, I think it's fair to say that this was a very unusual year. A lot of that was really brought on by the incoming administration. Uncertainty was really the theme with respect to energy policy, the Inflation Reduction Act, tariffs, trade relations, the war in Ukraine. All of those things were big obstacles and created a lot of uncertainty for market participants and investors to make decisions. And I think a lot of that has kind of cleared. We obviously saw the market bottom in April. And since April, we've seen a really strong V-shaped recovery in the stock prices. The price of uranium has come up from a low of 63 to now mid 70s. And it feels like the uranium price wants to grind higher based on investor sentiment. And I think growing realization that their supply challenges, even amongst some of the biggest and best miners, are real.
And so to that point, you did a raise earlier this year. You wanted to raise 100, you ended up raising $200 million. That money is spent now?
Yeah, I mean, that was a really well-timed, I think, transaction. We were really happy with the support we received from about 40 different institutional investors from around the world. That 200 million we wanted to opportunistically put to work in the market while the market was kind of, going sideways and being distracted with all of these tariff and trade issues that I mentioned earlier. We've spent that money. We've acquired another about 2.5 million pounds of uranium. Really happy with those purchases. And the trust has been trading much better in the last few days, and our at-the-market offering has also been reactivated after a little bit of a hiatus.
So that means the trust is trading at a premium, so you're able to raise cash. Why do you think it's trading at a premium?
Yeah, I mean, if you go back to April, and let's call that the market bottom, and the trust at that point was reflective of all of this uncertainty. And it was trading at about a 20% discount to NAV, which I think was the most extreme in its 4-year life. That has now closed back to a small premium. And I think that is a very strong barometer of investor interest returning to this space, people feeling like they can get positioned again, that we have more certainty going forward on some of these big, macro and geopolitical issues.
So there's been a new development at Sprott that I want to bring up, and that is the fact you can now trade options on that product. Tell us about this.
Yeah, we're pretty excited about this, and it was a long time in the making, and I wish it had come earlier. But as of this week, there is going to be options trading on the Canadian dollar line on the Toronto Stock Exchange. And why this is important is because it gives investors another tool to play the uranium space. It's important because many institutional investors over the years have gravitated more to options-based trading strategies on underlying ETFs and closed-end funds. And there isn't an active futures market for uranium. So this is really going to help to fill that void. I hope it creates a new use case for the trust where potentially producers, utilities, and traders could use these options to help gain exposure, manage exposure, etc.
And because we are in Europe, we have to talk about your European partner, Han ETF. They're based here in London, but they look after distribution, regulatory issues, etc. Maybe you can talk about that and how European investors, if they want to trade the Sprott product, they can do it through the Han ETF.
Yeah, I mean, this is a global category. There's global interest in uranium. And so at Sprott, we have a number of different funds domiciled in various jurisdictions, including Canada, the United States, and we have these Irish domiciled funds that our partner Han ETF distributes for us. So we have versions of the uranium mining ETF and the junior uranium mining ETF that are domiciled as UCITS funds, which are requirements for many local investors to participate in. Those are available in different currencies as well. And we're very happy with the partnership with Han over the last 3 years.
So I have to ask you about gold now. Your largest physical trust is the Gold Trust. And gold, great 2024, was up 25%. We got 3 or 4 months left in the year, but gold's up 30+%. Maybe tell us about some of the flows you're seeing into various Sprott products.
Yeah, I mean, it's been a huge win for our clients. Obviously, last year and this year, the Gold Trust is well through $12 billion US dollars, and we've raised over $1 billion year to date in that fund. I remember you and I sat down at the beginning of the year and we were talking about the Gold Trust, and I said we were really disappointed last year, not in the performance, but how much capital we had raised, which was about 350 million. And I said investors were just not paying attention. Now the fund is up another 30% and the money is finally starting to come in. We want to take advantage of the price action and add more to our vaults. So we've been very active on that fund. And more recently, silver's kind of come back to life and is at a 10-year high. And it feels like it wants to break free and surpass the 2011 high, which was at $50 an ounce. So we're feeling pretty good about uranium, gold, silver, and platinum at Sprott, and we've been very active in all those metals.
So one of the things I really enjoy about Sprott is the wealth of information you have on your website. If maybe you can just talk about that, and investors have an interest in gold, silver, uranium, or very many other products.
Yeah, I mean, we want to be the expert for all kinds of investors, whether you're a do-it-yourself investor or a very sophisticated institution. We want to make ourselves available and our team of experts. We want to share our insights. I probably spend the vast majority of my time on investor education in one way or another. You're a big part of that in terms of helping us get our message across. So we really appreciate that. But it's really important because many investors, and it doesn't matter who you are, have not participated in a lot of these metal markets for the last 10 years. So it's a process of education and research. Where do I get information? I need to make an informed, educated decision. And so we really want to help people through that journey.
And so if somebody has an interest in checking out the Sprott website, where can they go?
Yeah, go to our Insights tab, and we also have an Education tab. There are some really great white papers that we write every month, reports on precious metals, uranium, critical materials. Our podcasts are hugely popular. We have a lot of in-house experts and outside guests that we bring in to help educate investors about these different categories. So that's a really good starting point.
And you and your team are always great at innovating and coming up with new products. Can we expect anything in the near future?
Well, we've been pretty active in the last few months, and we're pretty excited about a few products that we've launched. The silver miners and physical silver ETF has been a really well-received product that just crossed $200 million in a few months. Our actively managed gold and silver miners ETF is gaining traction, and we're just about to launch a actively managed metals and mining ETF in the United States, which will be coming out in the next week or so.
And when you say metals and mining, that's pretty broad.
It's going to be a more broad, dynamic approach to taking advantage of opportunities across a number of different metals and minings and base metals, critical materials, steel stocks. It's going to be a more flexible strategy that our team is going to be managing.
Well, John, this was a great update. I want to thank you very much for spending time with us today. Good luck with your meetings.
Yeah, thanks very much.
David, thank you very much for joining us today. You and I recently did an interview where we discussed a lot of the recent developments at Denison that have come out in the last few months. The one thing we didn't talk about, though, was project financing as it pertains to Phoenix. And just as a reminder to our viewers, the CapEx on Phoenix is just over $400 million. So I want to talk about project financing. You recently did a raise, convertible notes. You raised $345 million. So my first question is, why did you do the raise now and why converts?
Yeah, Jimmy, look, it's exciting to be back on with you so quickly after all that summer news. And you're right, one of the most important subsequent developments has been our financing. So US $345 million convertible notes. Really important to understand that these are US style converts. So we've seen in the Canadian marketplace more conventional converts used. Often strategic investors coming in with this opportunity to then convert their loan position into equity later. This is more institutional distribution of US style converts, which allow us to settle the notes on conversion in our choice of cash, equity, or a combination. And that's unique. That means that we can choose to pay back the notes in cash. And that's an important background to the question of why do it now and why choose these converts. So we would not have done a conventional convert deal because we'd have been looking at a scenario where we see our share price moving up, and then likely outcome would be conversion into equity and thus dilution. That wasn't interesting to us. The ability to be able to pay out the note on settlement or on conversion with cash was essential for us, because what the instrument ends up looking like in many scenarios is pretty vanilla debt. And so, but because of that optionality that's there for the investor, we're able to achieve this very low coupon cost on the note. And so we're at 4.25%, which is far beyond what we could have achieved in terms of cost on a conventional bank-led project financing. And we estimate that we've saved over US $100 million in interest by going this way. Now, there is a conversion feature, and so that's something that we were mindful of. And fundamentally, the bond investor has the ability to convert when they're up 35%. We've layered on uniquely a capped call structure. So this is the first that we're aware of a Canadian domiciled TSX listed company to do a US style convert with a capped call. The capped call is important because it moves the effective conversion price for Denison up about to 100% equivalent from where we were pre-finance. So that would be in the like 432 US per share range. Now, what this means, a little complicated, is that essentially until we're up over 432 US, we have the potential to have no equity dilution on this. And so those are important factors, a little bit complicated, but really important factors for why this instrument mattered. Ultra low coupon, saving us $100 million plus versus conventional finance without the conventional convertible dilution because of the capped call. And so we have a structure that in many cases will look like vanilla debt, but has ultra low cost. So then with that low cost, it gave us the ability to execute it early, before we're permitted. And so now with funding in place, we have this advantage of as soon as the permits arrive, we're able to immediately execute on the project. So we did like the market dynamics at the time. The convertible market in the US, very strong, and you could see that the interest in our offering was significant, which allowed us to get the excellent pricing. So look, you need to have confidence that we needed to have confidence that we would execute on the project, which we do. And so we need funding to do that. That opportunity was there. We liked the terms, we liked the instrument, and so we executed.
And did a lot of the interest come out of the US?
Significant portion out of the US. US style converts is a whole other market, essentially. A broad group of institutional investors that would be new to our story, generally would not be participating in regular equity. These are convert-based investors in many cases, but also global distribution, including Canada and Europe.
And you did touch on bank financing. When you're looking at other financing options, that's one of them. What else would you look at or consider?
Look, overall, with the convertible notes deal, we're incredibly well financed. And so whatever else we would do on financing is really on the margins now. So there is the potential for some level of additional credit, whether it be overrun facilities or bank revolvers. But really, we can be very selective now in terms of rounding out any funding needs. Notionally, the notes plus our physical uranium, they fund execution of Phoenix. What we're looking at, if anything beyond that, is really to support growth initiatives within our company.
And David, we should really focus on your balance sheet now and the strength of your balance sheet. After this raise, you're now sitting on $460 million in cash and cash equivalents. You still have $2.2 million or 2.2 million pounds of uranium. So maybe you can just speak to that.
Yeah, Jimmy, overall, we're in a situation where we're talking about over $700 million in cash equivalents, uranium and investments. So of course, that does mean that we're in excellent financial position. We've tried to manage the company over the last several years to be in a place where we are in control of our own destiny financially. And we've tried to avoid being in a place where there's any degree of telegraphing or overhang around financing. So with that balance sheet, there's no doubt that we're incredibly well positioned to now execute on the project as soon as we're able to get those permits in hand.
So let's talk about the permitting process. The next significant catalyst for Denison are the meetings with the Canadian Nuclear Safety Commission. Maybe you can just take us through that timeline and what shareholders can expect.
Yeah, I think we've entered, an exciting final phase of the multi-year permitting process that we've been in, and I'm calling it the approvals receipt phase. There's no new work really to happen in our permitting space, on the permitting space or side of things, but to finish the approvals process. And so, one of the important approvals received this summer, which is the provincial approval of our environmental assessment, and that really kicked off this last phase of approval receipts. So there is additional provincial approval required for our pollutant control facility, and that's something that we're working towards and we don't see as the critical path. So it does really come down to the CNSC hearings, and there are two federal approvals from the CNSC. One is for our environmental assessment, and the second is our license to construct. Now, those will be heard together as part of one two-part hearing. So I know that seems a bit complicated. The hearing will hear the EA and the license to construct jointly, but it occurs in two parts. And the first part will be in October, which is where the CNSC staff and Denison will make its presentations. And the second part will happen in early December, where the public will have a chance to reflect on our presentations and make their, provide their feedback. And the terminology that's used is interventions. Interventions can be positive or negative, and we would expect that we will have many positive interventions for the project. After that process, the commission will hear the materials from the public, and then they will deliberate, and we're expecting a decision then in early 2026. So on our end, we're all about executing on those hearings and then preparing in the background to execute on the project as soon as the approval's received in the beginning of 2026.
So maybe you can just speak to that. So once you get that decision in early 2026, then you're going to make a final investment decision and then a construction decision. So maybe you can just take us through that timeline.
Yeah, I mean, FID is something that the market shouldn't be surprised that will occur on this project. We've been investing heavily in the project over the last several years, but you're right, there will be that sort of official decision by the company once we have our approvals in hand to proceed with the project. So final investment decision would follow. And then, we are organized to be able to start executing construction promptly. So in the background, right, you've got detailed design engineering and procurement. Project financing as well, but we've just touched on that. So that's well in hand. So that's tick on that side. We won't be waiting for funding. But where we're focused now in the background is on that detailed design engineering. We're already over 75% complete on total engineering. We will be approaching 100 to 95% complete by the end of the year. In fact, we're already in a state where many of the first year of construction scopes are at that 95 to 100% complete state, so that we are ready to hit the ground running. We've been procuring long lead items since late 2023, and basically most items are now long lead or require procurement. And our budget for this year was already very sizable, in the range of 70 million plus for completion of engineering and procurement of key items to make sure we can execute on the project schedule. So that's our job in the background, while our regulatory team is focused on preparing for the hearings and executing on the hearings. Our engineering and operations procurement teams are making sure that when the approvals come in, we're ready to execute.
So you have a lot going on.
Jimmy, we have an incredible amount of things going on because it's not just Phoenix. We are looking at the pipeline of projects and our partnerships with Orano. It is an incredibly busy time, and for me, quite different from where it was when I started as a company CEO 10 years ago. And it's really exciting to have seen our team build and to be in a place where today we're this close to executing on Phoenix. And in fact, we've already come back into the ranks of producer with our success at McClean Lake. So quite a turnaround over the last decade for our company.
So you're in London for the World Nuclear Symposium. You're meeting with investors. You're also meeting with utilities. I'm curious to hear about the meetings you have with utilities. Maybe you can just touch on that and what sort of questions they're asking.
Well, Jimmy, utilities are not that different than investors in terms of what they want to know. They want to understand the state of the project. They're also interested in how the project is being funded or the state of financing, the state of our technical work and de-risking and our permitting. They ultimately have an interest in accessing the uranium that comes out of the ground. The investor is looking for exposure to the dollars that come from us selling that uranium that comes out of the ground. So mostly aligned in what they're asking about. But we are very busy here, and we have been in what we call the commercial space for most of this year, engaging with utilities. Our team here at the WNA is more focused on utility engagement than investor engagement, although it is very interesting to see that the number of investors at the conference continues to grow. So that is an interesting aside. But no, our focus here is on updating utilities, understanding their needs, making sure they understand the status of our project, and looking for matches. We're not aggressively out there marketing our production. We have taken a strategically patient approach to selling our future production, but we do want the utilities to understand where we're at and have confidence and trust in the work that we're doing on the project. So that's really the focus, is keeping them apprised and informed about the project.
Jeff, thank you for joining us today. Your title at Denison is VP of Corporate Development and also Commercial. So one of your jobs is speaking with utilities and lining up buyers for your uranium production. I'm curious how these meetings are going with the utilities.
Yeah, thanks a lot, Jimmy. And certainly, WNA is an important time. The fall contracting season often kicks off on the back of this conference. But I think in terms of how our discussions are going this week and really how they've been, they're progressing and also having a natural transition point. We just recently completed a convertible note offering that bolstered the balance sheet significantly. And my role spans both corporate development and commercial, and project financing for us is part of that and very much integrated within our commercial strategy. And, recall we have approximately 2 million pounds of physical uranium in inventory. In the past, our priorities really focused on using that inventory to help bolster project financing and use it to monetize and fund the construction of the project. With the convertible note proceeds, we certainly have a higher degree of latitude in terms of how we use the remaining balance of that inventory. And so as we recently started production at McClean Lake, our balance sheet has been bolstered. Now the transition is naturally shifting to some of the more longer dated contracting opportunities, where we can use that inventory, McClean production, all in advance, forming near-term deliveries of long-term contracts, which are ultimately fed and supplied by our Phoenix production beginning in 2028. And, called this journey of explaining our commercial strategy and the multiple sources of supply we're offering has been something that's been really well received. And as we keep ticking off different milestones on our development curve, the enthusiasm and frequency of dialogues, level negotiations and opportunities is certainly accelerating with the utilities.
And Jeff, as you mentioned, you're meeting with a lot of utilities. I'm curious, what are some of the key questions that they're asking, and how does Denison fit into their strategy?
Yeah, well, I think that's also part of maybe the natural progress of how discussions have evolved over time. And I think the questions are fewer because when we're meeting them, we find our customers are up to speed on what we're doing. We've tried to establish ourselves as credible, reliable operators and stewards of our assets, that they're aware of the key de-risking milestones that we continue to check off on our path to production at Phoenix, as well as our corporate development activities, production at Sabre. So I think every time we're refreshing and updating with utilities, they're seeing how real the supply from Denison is and how it really is a differentiated offering. I think some of the natural focus of the discussion is when's Phoenix going to be producing? How much can you offer us? On what structures are you willing to transact on? And for us, it's really a give and take relationship where we're trying to understand what our customers need and what works for us. We certainly have an idea of how to optimally structure contracts, how to build a portfolio of contracts within our book. And so we spend a lot of time trying to optimize that function.
Those are great insights, and I want to thank you for spending time with us today. I know you have a busy day of meetings, so I don't want to keep you anymore. Once again, thank you.
Thanks, Jimmy.
Anya, thank you very much for joining us today. You've been with UxC for 18 years now, and you've been coming to the World Nuclear Symposium for a similar amount of time. And I'm kind of curious to hear what your thoughts are and how things have changed just in the last few years from when you first started coming here.
Well, the exciting part, first of all, thank you for inviting me. Really excited to be joining you for this conversation. I think the exciting part is new faces. For several years, we were all here. No, we all knew each other. There was no need to take business cards. I had to reprint a new box just for this year. So many new people in the room, a lot of investor interest, and a lot of folks that are, I found especially interesting, a lot of folks who were here 18 years ago for the first nuclear renaissance, took a break and are coming back to look at the nuclear energy once again. So that's the most exciting part. Of course, always good to see old friends, but meeting new people is good for the industry.
And they keep changing the venue. It gets larger and larger every year.
Absolutely. So it's I project we need even more space next year.
So UxC offers many different services to both the uranium and also the nuclear energy services or sectors. And a big one is price forecasting. And that's what I want to have a conversation with you on. And I want to hit on all aspects of the fuel cycle, spot, term, enrichment, and conversion. And why don't we just start with the spot market? How would you characterize the spot market year to date in 2025?
The spot market is always a good solid place to start. So far, we're about at 33 million pounds. And when I think about the spot market, I like to compare it to the previous year because we know what last year looked like. Last year at about this time, and I took a peek at my numbers this morning, we were at 30 million pounds. So that gives you that we're roughly sort of 10% above, but about in line. So my question for myself is whether or not, sort of looking at total volumes, whether we're going to hit 50 million pounds, which is sort of average number for the spot market transactions for the year. It looks like we have a pretty decent chance to have sort of a pretty solid year. But I will say that numbers only, if you look at the totals, they hide sort of a deeper story about the trends in the market. One thing that I would say that as far as investor financial interests, such as purchases by spot and other entities, roughly in line with last year. But what we do see, so no change there, but we do see utility interest and utilities coming back to the spot market, which is in a significantly larger manner than they participated last year, which is good. We do need end user participation. And in fact, not only the utilities purchased more in the spot, they also, the numbers, some of the trader purchases was on behalf of the utilities to carry that material into the forward years. So we are marking a return, a small, still yet a trickle, but a return of carry trade. So that's linking all the years and the markets, which is very healthy and very supportive for the spot market.
And you said the utilities are more prominent this year than past years. Why?
It's various reasons, not a single sort of big answer. One is, opportunistic. So if the spot market softens, certainly the interest picks up, some discretionary buying. Some to plug various little needs here and there, but it's not necessarily some, there's not necessarily a big explanation for it, but they do see, the fact that when the spot market is significantly above term, that means the utilities retreat, but any softening means the utilities are looking back as something that presents good opportunities, be it for inventory buying, be it for needs to carry forward.
So let's talk about the term market now. And last year we had 110 million pounds. This year we're at 45 million pounds year to date. How would you characterize this market?
Yeah, the numbers we have so far, and given the fact that we're entering September, the market looks a little anemic, doesn't it? It started off quite slow. We have seen a bit of an uptick in utility interest just prior to coming to the WNA. So So we've had sort of a mini waves of requests and some contracting. I would predict within UxC, we keep tabs of potential interest. I think that we are marking, as of the moment, potentials, not necessarily that they will realize, that could bring our, if all come through, could bring the totals close to last year. We might, of course, fall short. But I would say that one of the things that, of course, the numbers oftentimes depend on large utility purchases. So if you have big players in the market that signed large contracts, then you might have quite large spikes. So any kind of wave of buying from the likes of China, signing large contracts, it will move the numbers as well. But I do anticipate continued utility interest in the long-term market for the remainder of the year and going into 2026.
And so if we assume 45 million is the right number right now, that means you anticipate a lot of action in the next few months.
I think there's potential for that. Whether or not it will materialize, it is yet, it depends. It's just our projections of the timing of some of the RFPs and based on the needs and insights from the utility buyers.
So let's talk about enrichment and conversion now. These are other important aspects of the fuel cycle. How would you define them?
Well, conversion, I think everyone agrees it's the weakest link. We already established that. Nobody disagrees with that statement. What we are seeing in conversion is the long-term price continues to remain very strong. But the most important aspect about conversion is the fact that we still have not seen any firm investment decisions regarding either new capacities such as Springfield's or GLE's PLAF plant or expansion such as, for example, by ConverDyn. So the delay in reaching these investment decisions is certainly something that's a concern for the utilities, and my hope is to see by the end of 25 going at least in, within the first quarter of 26, that some final decisions are made that would allow for that capacity to come online around the turn of the decade, because it is quite vital that we see new conversion capacity. In the meantime, everybody is doing a great job on production side. All three converters are doing actually a phenomenal job. But of course, as anything with conversion, we kind of keeping our fingers crossed that there's no production disruptions. The industry has, it's complex plants to operate. Anybody who thinks conversion is easy just because it is, a chemical process is certainly quite wrong. So we're just, let's keep our toes and our fingers crossed and cheer for the converters to continue their good job.
And before we touch on enrichment, when you say conversion is the weakest link, that's because the West or utilities are so reliant on Russia for conversion capacity?
So, the story of conversion really started changing in 2014. So in 2014, you had a situation, we always had such an overcapacity in conversion. And in fact, I remember the times when conversion was almost free. So if somebody had UF6 and they wanted to unlock that U308, it would be given away virtually free. But in 2014, there was this realization, we have too much capacity. So two plants shut down, one in Russia, actually, their largest plant that accounted for 60% of capacity, and one in Springfields in the UK here. And then we still were at large overcapacity. And in fact, secondary supplies and conversion accounted for more than half of supplies that were in the market. So we did have a decision by Honeywell to shut down the Metropolis plant. And what that shutdown resulted is in this absorbing of all this inventory that was heavily overhanging the market. So as a result, we're sort of in this rebalanced market without all of this excess that is overhanging. But that means should there be a supply disruption of any kind, we don't have all this stuff that would cushion the blow. So we certainly we're certainly a much balanced market, a much tighter market, without that excess capacity or those heavy inventories that were sort of safeguarding any kind of disruption.
And remind me again, Russia is responsible for how much of global capacity?
I don't recall as to the exact number, but Russia has primary sources of conversion, and they also use their enrichment capacity in order to produce UF6 through underfeeding and tails re-enrichment. So they have sort of these two flows of conversion capacity. So they have the direct one and indirect as well. And it's notable, but Russia is not does not recall that Russia does not sell conversion on its own. So I don't think there was ever a Russian contract that was just for conversion services. So Russia, if it does place conversion, it is part of a packaged product, either together with its enrichment, part of EUP, or part of their fabricated fuel. So conversion for Russia is just an intermediary step and not a focus of their industry.
Understood. And what about enrichment? What can you tell us about that sector?
Well, enrichment is in a very, the enrichment sector is definitely undergoing a process of rebalancing. We had a 2022 big turning year, without any doubt, for the entire nuclear industry. I would say that Russia's invasion in Ukraine, this is just a step back. I would say that it is on par with Fukushima as far as the impact on our industry. So the impact is significant. It rewrote completely the supply demand, the market fundamentals, and changed it. So we within UxC just don't look at the entirety of the global market on the demand and supply side. We'll look at the open markets and the supply that's available there. The enrichers definitely, so it's a small group of people, at least for now. A lot of it aspiring entrants, but both Urenco and Orano made quick moves in terms of capacity expansion. Kudos to them. They had virtually no centrifuge production at the time with the wind down of ETC. So big investments, big moves, and expansions that were fast. And they did make adjustments in the way that their plants operated as well to unlock that primary SWU capacity. So there's that, but at the same time, where we are seeing tightness in the market, the utilities ensure that they're covered for the next few years. But going forward, there is a big question about. While we definitely can expect Orano and Urenco to gradually add some extra capacity, there's definitely a desire and recognition that a healthy market requires a certain degree of competition, and that competition has been reduced with exit of Russia. So you went through from this competitive oligopoly towards a duopoly. With marginal participation from Russia and China, and going forward, there is a clear desire by the end users to inject a bit of competition. So there's a lot of newcomers in enrichment sector, which is not something that we could have anticipated just a couple of years ago.
In the past few years, utilities have been more focused on conversion and enrichment, less so on uranium. Do you think that's still the case, or is it starting to shift now more toward the acquisition of uranium?
You're definitely right. The priorities were on the enrichment and conversion, and the reason is for that tighter market, reduced number of players, concerns to put all of these things in place before uranium is procured. There's definitely a lot of attention that's being paid to uranium from strategic standpoint, desire to encourage junior producers to bring new production online, desire to layer in some coverage. But I would say that it has always been the case that uranium, there's more players in uranium market, and there's different ways to procure the pounds. So I would say that the level of concern about uranium, it's not that it doesn't exist. Absolutely, uranium is getting the attention from the utilities, but it has always been less than about this more about conversion and enrichment, I would say that it would continue to be the same simply because there's more options and more solutions that can be put in place.
So we can't have a discussion on uranium without talking about geopolitics. And this is one of the things that makes mining so interesting and also challenging. And I want to bring up recent events. China just had a military parade. They had heads of states from 26 different countries, but the most noticeable ones, in my opinion, were, of course, China, the host country, but also Russia and India. And all three of these countries have very aggressive nuclear energy programs and aspirations. If you look at 5 years or 10 years, this new alliance that's forming with these countries, how do you think that might impact the fuel cycle, and how will it impact Western utilities?
Well, there's definitely rebalancing in the in geopolitics. Russia, recall that Russia, China, India, and Brazil are part of a bloc called BRICS, and that bloc is definitely getting a lot of traction. They are seeing each other as allies. Particularly, for example, India was when you look beyond nuclear and you look at oil and gas, India has become the #1 buyer of Russian oil in very quickly and increased its imports. So there's definitely historic alliances, and we will see some of this posturing. I would imagine that one of the things that folks are asking, and I imagine that you're implying this, is the fact that Kazakhstan and Uzbekistan are located in a very tough region with very big neighbors, Russia on one side and China on the other side, and what happens to that supply. Kazakhstan has been having to balance its and Uzbekistan as well. So I'm saying both of these large Central Asian producers have had to deal with these big neighbors for quite some time. So it is a delicate diplomatic act, and it is also this idea of how to have these different vectors in diplomacy in order to ensure that you're not beholden to either of the two big neighbors, that they can be quite overwhelming. And this was also reflected in, if you look at the geographic breakdown that Kazatomprom puts forward in their reports. They are quite cautious about ensuring a certain degree of diversification, and so in many ways, this distribution and diversification is reflective of their foreign policy as well. I would expect their desire to do so going forward.
UxC recently published a report, and it was titled "The Calm Before the Storm." And I'm curious about the title, and maybe you can just give us a gist of that article.
Yes, I think you're referring to an editorial we did in the UX Weekly. I do give credit for that to UxC President Jonathan Hinze. It was a bit of, we do put forward not just the analysis, but a lot of the times our opinions. So it was a mere couple of pages, but it was a bit of our take on the long-term uranium market and the indication about the fact that there's definitely upward pressure, that folks should not be relaxed and take uranium industry for granted, and there is uncovered uranium demand that folks need to take action on, and it was a bit of a warning to the industry, just to not to delay action on some of the uranium coverage.
And so if I push you and I try to get some numbers out of you, where do you see the term price going a year from now when we're having a conversation here at the symposium?
All right, if I take my UxC hat off and I just stand here as Anya, this is not a UxC forecast. I just want to be careful, and maybe we'll regroup a year from now, see how I do. I would project I'd say let's try for 83 long-term price and 80 in the spot. And
Those are pretty conservative numbers.
I think it is very easy to forget about the fact that we gained a lot in terms of the prices in uranium, and that it's always easy to wish for the sky and the moon, but what we really are looking for is a sustainable industry with sustainable prices. And I'd say, looking for the last pound that this industry needs and the costs of this pound, and I'd say it's quite reasonable number in my view. But it still is, spot market is always inventory driven market. There is still a good bit of material out there, so we'll decide. It will continue to be quite volatile. But for the term, we're at 80 right now, and when we're saying 80, it's a base in a base escalated contract. This is the base number that is escalated, so that your delivery is not at $80. Your delivery is at a, depending on where that is. So a lot of the times people don't really understand what our long-term indicator means, but it doesn't mean what the price at which somebody is buying. It is just that fixed portion. And as a matter of fact, there is a big shift towards market-related contracting right now. There is a recognition that there's a belief that the market has upward potential, which it does, and market related means that you're putting some kind of parameters, floors and ceilings, but you do have ability you will move depending at the time of delivery where the spot price is. And the suppliers are definitely wanting to capture that upward momentum. So we'll see. I am projecting personally, Anya, not as UxC, an upward movement in the term price. Just threw out a number of 83, but I think it points to a steady upward increase.
Well, great insights, and I want to thank you very much for spending time with us today. And I know you're very busy here. You got a lot of meetings going on, so I don't want to keep you. Enjoy your time in London.
Oh, thank you so much, Jimmy.
Leigh, thank you very much for joining us today. We are in London for the World Nuclear Symposium, and you're meeting with a lot of investors and a lot of utilities. And I'm curious, especially with regard to utilities, how are those meetings going and what sort of questions are they asking?
Yeah, look, James, it's the busiest we've ever had at a WNA, and with recent events specifically over the last 3 months, but also over the last 12 months, there's no doubt there's added stress into the supply chain, be it sovereign risk with respect to what happened in Niger, or downgrading in productions, be it in Kazatomprom and most recently MacArthur River. So the consequence is utilities are looking at their fuel procurement, looking at the security of supply, and because security of supply is such a critical component of nuclear fuel, it's resulting in many more meetings between the producers, emerging producers, and utilities. And we're seeing that in contracts that have been signed recently, which we announced. We doubled our contract book. They're currently with all US utilities, but our negotiations cover the US, Europe, Asia, and the Middle East. So it's certainly taking up a lot more of NexGen's time than what it did, say, the same time last year at this conference.
And I'm glad you brought up the contracts because, as you mentioned, in the last 6 months, you've signed contracts totaling over 10 million pounds with US utilities. And the way you structure these contracts is different than what we've seen in the past. Maybe you can just speak to that and how that benefits NexGen.
Yeah, that's true. The market's it's evolving. I wouldn't say it's changing. It's evolving though, and what that is reflecting is the demand and the supply. That's the factors that are affecting those two components playing out. With respect to us, we have really, our contract position reflects the low economic cost and technical certainty around our mine. It's got a very, very high confidence around production levels in certain years. And so what we have done is seen a reduction in the length of the contracts that we've entered into from what had been done in the past, and also new pricing mechanisms that have floors, ceilings, but also completely at spot, and then no floor, very high ceilings. And look, there's not one contract that suits all mines, and there's not one contract that suits all utilities, and it's about understanding the unique characteristics of the mine and with the requirements of the utility. And what we provide at NexGen is high flexibility, but with very high confidence of delivery. And that is reflecting in the contracts evolving to reflect those circumstances. So to be a part of that movement, which is ultimately at the betterment of both the producer but also the utility, is very exciting. And I think you'll continue to see that evolve over the next 12 months and beyond.
And you mentioned that the contracts you've signed thus far are with U.S. utilities, but you're also speaking with European and Asian utilities.
Yep.
Why have you only had contracts with U.S. utilities? Why haven't we seen other?
Yeah, it hasn't been any type of focus. It's probably just been that those ones have materialized before the others. We're at very advanced stages with utilities in the US, even with some that we have signed contracts with in terms of follow-up contracts. Negotiations with Asian utilities have been over a broader period because that's very relationship based. But I would say we're coming to the end of and we'll have a offtake with utilities in Asia probably before the next conference in 12 months from now, probably even perhaps earlier than that. Our contract position, we're currently at £10 million over the first 5 years. We have a break-even volume of about £3.5 million at NexGen. So we are almost at beyond a break-even stage over the first 3 years. And the next contract, I think, will take us over that break-even stage or level for the first 5 to 10 years of production. And so we've got many, many more pounds to then offtake, but we've crossed that minimum threshold, which gives investors and everyone a lot of certainty. And that's what we're about, providing certainty.
And why don't we talk about project financing now? You have had expressions of interest from many banks totaling $1.6 billion. So you have a lot of options available. Maybe you can just talk about some of the options and how you might proceed when it comes to financing.
Yeah, the capital cost of the project is $1.5 billion US as per August 2024. And we've had expressions of interest of debt of $1.6 billion US. That basically means you're only ever going to take maximum debt's probably roughly 2/3 of the capex, so we're talking about $1 billion. That's been led the biggest. That's with multiple lenders, but the biggest lender is an agency that's supportive of nuclear energy and development of projects in our region, and they're on they're on really good terms. We're also looking at equity as well, and then potentially a prepayment on a future supply as well, which would also contribute to the overall financing package. Look, given the incredible economics of the project, it's not like the quantum's not the challenge. It's about getting the right structure relevant for our mine and the timeline to production and the amount of production that we're looking to deliver.
And when can we expect a final decision with regard to
financing? And it's totally around the permit, because we actually can't start spending that money until we have the permit. So in terms of the financing decision, that will conclude at the time we have final federal approval, which is expected to be with the commission hearing dates. The first one 77 days away, and then the following one on February the 9th, 2026. We would expect federal approval within 60 days following that, as it's legislated. And so you'll see a conclusion of that financing package at or around Q2 2026.
And so once you get that final decision in Q2 of 2026, of course, you're going to make a decision on the financing, but what else can we expect in terms of the timeline associated with that decision as you move toward construction?
Yeah, you'll see more offtakes. You'll also see the drilling at PCE, which is going incredible. Only 3.5 kilometers from Arrow, which is the world's best. We could be having a challenger to the world's best in PCE. It's looking fantastic. And so, yeah, exploration results, offtakes, the team's building. We're getting prepared to build. And you also see permitting. We're very confident around the commission hearings, given all the work that's done, the support that we have from all our communities in the project area, and they're advocating very strongly, let's get going. So we're ready. We know exactly what we're building. Benefit of a long permitting process is it allows you plenty of time to plan, revise, and build the team, and we're ready. We know what we're building. We've got the team in place. We're well funded for the first 12 months of construction. The total financing package will be done well before we run out of money. So it's an incredible time for us as a company, but also as an industry. It's really evolving.
So I'm glad you brought up PCE because I want to talk about some of the exploration results. And as you mentioned, it's only 3.5 kilometers away from Arrow. Do you envision this being another separate deposit, or could it be just part of one massive deposit?
I think what we've seen today, geologically, it's the mineralizing event of Arrow. PCE is the same mineralizing event. Basically, there's been a significant mineralizing event in the area. These deposits are hosted in the cracks in the ground, and I'd say even broader regionally, you see Patterson Lake South. I think that's all part of the same mineralizing event. As you're aware, James, we started drilling in 2014. We found Arrow with the first drill hole within a 4.5 kilometer radius. We've now hit PCE 3.5 kilometers within that 4.5 kilometer radius. And we've got a lot more drilling to go just in and around Arrow to really understand the true extent of mineralization, let alone testing the next 8 parallel conductor corridors on our Rook 1 project. So geologically, we are just on the absolute beginning of it.
Leigh, I want to get your views on another topic altogether. And one of the newest members of the World Nuclear Association is Microsoft.
Yeah.
And that's been well publicized. And I'm just kind of curious to hear your views on this. We saw a lot of strategic investors enter the lithium sector. GM, for example, they made a huge investment in one of the largest lithium deposits in the US. Do you see that sort of thing happening within the uranium sector where we might get a large tech company coming in? And
I think it's certainly possible. And look, Microsoft joining the organization, like, what a wonderful development. And, all these data centers aren't going to work unless they're powered by nuclear energy, which is so heavily reliant on the fuel. We've seen that in other industries. I think it's very possible that we may see that. Congratulations to Microsoft. Like, Bill Gates led the small modular reactor development, and just such an incredible organization. And they're very smart. They'll know that this doesn't stop with the small modular reactors. It's full fuel cycle that needs to be covered, and I think that may very well happen, as we saw in the lithium industries and the battery metal industry. So watch that space.
well, Leigh, I want to thank you very much for spending time with us today and providing an update. I know you have a day chock full of meetings, so I don't want to keep you. Once again, thank you.
Jim, thanks.
Curyer, thank you very much for joining us. You just mentioned that you've been coming to the World Nuclear Symposium for 20 years.
It is my 20th year this year, yeah.
Hard to believe, but I'm curious how things have evolved over those 20 years.
My hair is grayer, but it's been, you look at the symposium, sure, it's the 50th in total, so it is a little bit bigger than it has been before. but it really like it's I keep saying it every time we talk, but it's just like the momentum in this industry and the sort of the optimism. It's really something special this year. So it's a great time to have the anniversary, but it also really it goes to show that this industry is really feeling some tailwinds right now, and yeah, it's just exciting to see everybody after a little bit of a break over the summer to have everybody get together and kick off the fall session essentially. So it's probably the most exciting one so far.
And to your point, one of the reasons why it is exciting is because one of the new members of the World Nuclear Association is Microsoft. And the WNA has been promoting this fact, and maybe you can just speak to that and their entrance into this industry.
Yeah, I mean, it's normally you'd have like, oh, it's the miners, the utilities, and that's kind of it, right? And it's like we are in a little corner of the world. Our industry is a little club. We like to hang out together, and we're like a little family. But now you're starting to have companies like that come in, and I think it goes to show that it is really momentous. It is a paradigm shift for nuclear energy as a whole, and it's like that to see companies like that come in with their capacity and the resources. It's very, very exciting to see, and it's whether it is that it's they think it's a little slow. The industry itself is growing a little too slow on its own. Utilities maybe can't ramp up as quickly as they would like. As like one of these hyperscalers would like to see. So if they can get involved and kickstart a few things, I welcome them here. So it's very exciting. I haven't seen any of them yet, but I've been too tied up in meetings. But hopefully I can catch one or two of them here. That would be great.
So I want to ask you about the uranium spot market, and that's where you spend a lot of your time. And I'm sure you would agree with me when I say 2024 was characterized by a lot of frustration because we had a big pullback. And this year it seems to be more stable, and maybe you could say it's consolidating, and it looks like it's grinding higher. Can you just speak to what you're seeing in the spot market right now, and what are your thoughts as we go into year end?
Yeah, it was very quiet in the spring, and it wasn't that much going on, and everything was in a holding pattern because there was so much uncertainty of is there going to be tariffs, are there going to be sanctions, what's going on in the geopolitical situation, and then I would say in part, much thanks to Sprott, who did a bought deal raise of $200 million that sort of kickstarted a few things back in June, and when you are in the market, you get a very good feel for what's around. So that was a very good learning process for us because we've been fairly quiet for some time to kind of see like this is the state of the market. So now we have a much better picture of that. And also with the recent news now, we have some of the large producers are having some production issues. And I think that just goes to show that it's like mining is not easy. And it's having those news come out leading into this big sort of start of the fall session. I think it's very constructive, and it gets on people's radar screen that you can't take uranium supply for granted, and then people need to pay attention to it.
So year to date, approximately 32 million pounds have traded in the spot market. But in terms of liquidity, how hard is it to acquire 500,000 pounds or 1 million pounds?
I mean, it was perhaps easier than we thought even in June, but it has been because it was quiet for some time. And there's some sort of chunkier pockets that were lying around, and I think that surprised, well, us first when we found it, but it's also then it surprised the rest of the market. So then you saw a lot of material coming in as a result of that. But I would say that chunk is cleared out now, so it's a much more of a balanced market today. That was only one buyer in June, that was us, and now there's a few ones around as well. So it's a much more balanced spot market, and I think to buy 500,000 pounds today, I think you could find it, but the price won't stay where it is.
And what's your sense about the floor? Do you think the low 70s is a floor for the uranium price?
It depends on the dynamics at any given day. If someone decides to dump a bunch of spot stuff in the market and no buyers is around, but I would still say like anything with the 6 in front of it, I think there's a row of utilities that would pick it up. And after spending a couple of days here and just feeling how investors are thinking about the space too, after the announcement of the production issues, I think anyone would pick them up as well. So I find it hard to see that we would have a big pullback at this point anyway. And it's and then going forward, exactly where it will go, that depends on a few different factors. But but I would certainly say there's a lot more upside than downside, no doubt.
So let's talk about the term market, and it's been really quiet this year. Approximately 45 million pounds have been contracted year to date. What's your sense there, and why has it been so quiet?
Yeah, that's a good. I would say it was correct for the first few months of the year that it was very, very quiet. But then after that, there's been a fair number of RFPs, and I would say reporting is on a voluntary basis. So you don't have to report if you don't want to. And I can certainly understand if you're a utility and you have a lot of uranium to buy, you don't want to signal it because now they're aware that that's a number that investors really look at. So if they're starting to signal and we're buying a lot of uranium, they say, oh, contracting activity is up, a lot of investors are going to pile in. And while it might not affect the term market itself, it will affect the spot price. And the spot price in turn will affect your floors and ceilings that you're negotiating. So they're probably being a little bit more coy about it, how much they actually are contracting. And it doesn't seem like the 40, 45 million pound, whatever that is, doesn't really jive with the activity that we have seen. So I would not be surprised if the number is actually quite a bit higher, but we just don't know exactly what that is. But there is some reporting after the fact that can happen. So that's when you had three utilities come out for three U.S. utilities come out for RFPs in July, which normally is a very quiet month. And you add up the combined volume of those RFPs versus what was reported contracted at the end of the month, and the reported number was much higher. So that to me says that they actually accepted several offers. So it's just like it's a very opaque market, and it's getting even more opaque, which I understand is frustrating for an investor. But if you're a utility and you have a significant amount of contracting to do, I don't necessarily blame you. So it's just something we're going to have to live with. So that number is probably not something that's worth staring yourself blind at. So it just adds some opaqueness to it, even further opaqueness, which is hard. But I also think investors who are here on the ground talking to active companies and traders, at least the ones I've spoken to so far, come away very, very constructive.
So we saw a large RFP from the Koreans, 8.8 million pounds over 10 years, with a floor of $65 and a ceiling of $101. Do you think those terms are...
They're not even escalated. So I would say, I was at a lunch yesterday and I was quoting these numbers, and I saw a row of producers sitting in the audience, and I was like, I can't see any single one of you guys sending in a compliant offer in that process, and I saw a lot of head nodding. So we'll see. I mean, I never say never, but I really would be surprised.
So those terms are totally unrealistic.
To me, I mean, if I was a producer and I had the available pounds to bid into it, I would certainly not send in a compliant offer. So what happened 2 years ago in a similar process when they came out, that was when the market was running from the Symposium onwards, they had exactly the same situation. They stipulated these are the terms you have to abide to in order to be compliant. They got no compliant bids. So they basically had to close their RFP, reissue it with higher levels. Same thing happened again. The market moved away from them. No one sent in compliant offer. They repeated this process 3 times, and they ended up contracting in January as opposed to September, October. And obviously it hurt them because the spot market itself moved from 55 or 60 up to over 100. So I'm not saying it's going to be in exactly the same repeat this time, but they're running the risk of having a somewhat similar situation.
So last year we saw 106 million pounds contracted in the term market. Do you think we're going to hit 100 million pounds this year?
I think we will. And whether that number is going to be reported or not, that remains to be seen. But I feel pretty confident that, there is definitely activity going on. And the utilities that I met with too, saying that they're preparing to get ready to issue them, whether it's going to be Q4 or slide into Q1. But I think we'll see a handful of utilities in the next few months here come in with RFPs.
So you're meeting with a lot of investors and also utilities, and I'm curious, what are you hearing in these meetings? You spent a lot of time with John Ciampaglia of Sprott, but maybe you can give us some feedback and color on the meetings you're attending.
Yeah, it was a sort of a one-day conference with a bunch of investors, sort of half-hour speed date meetings, and but it's similar questions. What are we missing? What's the bear scenario? We get the bull scenario, and it's like every single one is asking what can go wrong. And you don't want to come across as too big of a cheerleader, but it is really, really hard to come up with what is it. And it's like everybody, sort of a nuclear accident, but that's they're not very likely. It's so I disregard that case. You really struggle to come up with something. So you can see a major global economic downturn, but then that it's not just uranium or nuclear energy that get affected in that case. We have bigger problems. So it's really hard to come up with something, and I think people are starting to realize that too. That the downside risk is so low compared to the upside that this space is starting to get quite exciting for generalist investors, not just the contrarians that were in there early on. I think they moved on already. Some of them are actually looking at potentially coming back, but it's more now the really big generalist funds. So it's quite exciting from that perspective. At the same time, on the utility side, also very exciting. One, they've taken care of their enrichment and the conversion needs, because that's obviously forced to do so with the Russian invasion of Ukraine. Now they're starting to put their attention to uranium itself, but they also have very exciting new build plans, and these are plans that aren't necessarily, the investment decisions aren't taken yet, but they certainly plan for it. And this is something, a 10-year project or whatever it might be, but it's every single one they're starting to have plans. So it's like they have their work cut out for them, but at least it's a very exciting challenge to have. Like that, we get to build something new. We don't have to worry about how to cut this thing down or transport it or decommission it. We're actually worrying about how do we build it new, or how do we restart it even, or how do we extend the lifetime. So it's just sort of gives an overall feel how the industry is in a very healthy place. Right?
So, Pierre, as we wrap up, I'm going to put you on the spot now, pardon the pun, but the spot price is trading in the mid-70s. Where do you see it trading at the end of the year?
Wow, that's a good one. It's like, because it's always going to come back and bite me, and I'm not a
that's why I'm
not a
on YouTube
licensed forecaster, but I'll stick my chin out and I'll probably say it's gonna, it might even start with a 9. Say certainly 85 plus. I'll go there.
Not nearly bullish enough.
I'm careful, so there could be more bullish people than me. People do a great job being bullish, but I'm a little more measured. I put it more as a conservative case.
And Pierre, as we wrap up, you have spoken with a lot of people at the conference in the last couple of days, but any other insights you want to share?
No, it's just that it feels constructive. It feels positive. It doesn't feel sort of hyped up. It just feels like, no, this is it's really the rubber hitting the road. It's like the fires that was put out are put out when it comes to other concerns about the fuel cycle, and now it's really time to worry about uranium, and not just near-term uranium, but what's happening 5 years from now, 10 years from now. So that's sort of that fundamental momentum is building up, which is, I think it's just healthy, and it's about time. So
I'm glad you brought that point up, because I spoke to somebody here, and they were saying they sat in a lot of meetings, and one of the points they made was everybody's talking about nuclear reactors and nuclear energy. No one's talking about uranium.
Mm-hmm. And they think they need to worry about where are the new mines? I mean, NexGen is the one big, standout in this, and it's a huge mine. But it's not just a matter of if it's coming online. It's we need it. It needs to come online, and it needs to be in, if not 30, then 31 or whatever it's going to be. But we need it. The industry needs it, and it's a very big one. But that's not going to be enough. We're going to need more than that one. And those assets, they're not coming online at $75. That's for sure.
Well, Pierre, I want to thank you very much for spending time with us. I know you got a full day of meetings, so I don't want to keep you any longer. Once again, thank you.
Thanks a lot, Jimmy.
Dastan, thank you very much for joining us today. We have a lot to discuss in a short period of time, so I want to get at it. And I want to read a little section from your recent press release, which was based on the 2026 production strategy. And I quote, "The company does not view the current market developments to be sufficient to return to the company's initial 100% levels at this time, which are now being decreased by roughly 8 million pounds, cutting about 5% of the world's primary supply." So when I look at these numbers, that's quite significant to me, but maybe you can just elaborate on why the cut in production.
Yes. Hi, James. Happy to see you as usual. With regards to production, basically, we're still there is still a lot of internal work, a lot of discussions, negotiations we're having simultaneously with our partners. Yes, we said in our press release statement that we don't view market conditions they are inviting enough right now. All the fundamentals are in place, so maybe it's not the market conditions I should have said it otherwise. It's more to do with the willingness of market participants to commit, basically. And I guess we need to see more action on their behalf. This is something I would like to see. Not only interest, but action.
And maybe you can elaborate on that. When you say action, what exactly do you mean? I'm assuming you're referring to price.
Well, I hope after this this WNA, the commercial team is going to be busy for a couple of months. That will indicate that everything was according to plan and everything went well.
So you touch on an interesting point, because year to date, only 45 million pounds have been contracted, and we only have 3 months left in the year. Do you anticipate a lot of action happening in the last 3 months of the year? Are we going to be able to go from 45 million pounds up to maybe 100 million pounds?
I certainly hope so. I hope so, and from what I've been hearing with from our commercial team, there is actual indication that certain concrete steps will be taken. So, as I said, I have very high hopes. But then again, we had same expectations last year. They never came into life, and there were certain milestones in terms of like everyone was expecting certain surges in contracting, and nothing happened after. When I say nothing, I mean nothing on a big scale, nothing to the level that the community was anticipating, let's put it this way. So WNA last year, NEI last year. And when we were talking about taking some concrete measures, I also think that certain action needs to be taken on behalf of new builds. So it's been a year now since the Net Zero Initiative has been signed, almost a year. In last September in New York, you've seen where 14 major financial institutions pledged their support. I guess now is the time to actually start building. For once someone starts, I think everyone else will follow. So that will keep the momentum going.
It's almost like there's this sense of hope within the industry with the fuel buyers. They're hoping more supply is going to come online. They're hoping geopolitical situations are going to change. What's your assessment of that?
Even if geopolitical situation will change, I guess certain issues that are associated with over-reliance on foreign supply and the complications that are arising from that, they'll be addressed either way. So I guess it is safe to say that we're going to see certain measures aimed to increase domestic capacity within the US, especially to do with, if you heard the news recently, and enrichment side as well, I guess. Certain measures will be taken in that direction, all in all. But with the growing number of new builds coming from Asia, namely China, it is obvious that there will be enough room for everyone in the market. It's just like, I guess everyone should step up and basically start securing either their supply or their sales, depending on which side you're on.
I want to ask you about sulfuric acid. In the past, this has been an issue. You have 2 producing plants. You're building a 3rd one. Maybe you can just give us a sense of how that is going and when we can anticipate production from that new plant.
We expect the 3rd plant to be fully ramped up and operational by the end of 1st quarter of 2027. The deadline's been shifted already. So I guess everything that could have happened and prevented this happening on time already did. So I don't anticipate any further changes to the construction and production schedule.
A big part of your job is speaking with investors. And I know you've been totally jammed this week. Every day you got 5 to 10 meetings set up. What sort of feedback are you hearing from these investors?
It depends. It depends on the investor profile specific, but usually those who are familiar with the company, those who have been following us for long, they ask some random odd questions, sometimes not even associated with the current state of affairs, because they understand the business well enough. They understand the changes in our figures, performance figures, indicators, and they themselves, they know the explanation. So sometimes they just confirm their own judgment, as if to say. And I was really surprised by the in-depth knowledge of certain traits that are attributable to Kazakhstan in general. That shows a deep sense of understanding and involvement, analysis, and it's really nice. People know about sulfuric acid, about some production materials in Kazakhstan more than we do, and it's really surprising.
So we touched on the 2026 production strategy. We also touched on sulfuric acid. You gave us some feedback on some of the meetings you're having with investors and also on the utility side. Any other insights you want to share about your meetings that you've had this week in London?
Well, the funny thing, everyone talks about the second nuclear renaissance, but at times I hear people saying, "Well, it's not the second one. It's in fact, it's the third one." You know, and one gentleman I heard saying, "Well, it's the fourth one, in fact," and I guess you've seen them. In general, it's obvious that the interest remains strong, and the number of attendees is increasing. Certainly, once again, I'm really happy to see you here, and I think you're doing a great job in exposing the coverage of the industry overall.
So you have been with Kazatomprom since 2016. You've been coming to this symposium since 2022. What changes have you noticed in the last few years since you started coming here?
Well, the overall sense of optimism, the outlook, the number of attendees, the profile of attendees. You see, previously that'd be more, say, focused group of those who are within the industry, whereas now you see a lot of external people who are becoming part of the industry. So I guess it's somewhat apparent that this conference is a major success, and going on forward, its importance and prominence is only going to increase.
We have some of the world's largest investment firms here now.
Excellent. This is a very positive and encouraging news.
Well, Dastan, that was a great overview, and I want to thank you very much for spending time with us today. I know you have a full day of meetings and you got to get at them. So once again, thank you.
Thank you, James. Pleasure.